Okay, ladies and gentlemen, let's talk about crypto. More specifically, the case for crypto, the case for owning cryptocurrency in times like these. Actually, the timing for this is absolutely perfect because as you can see here, this is my Coinbase account kind of in real time. I guess why not refresh it? That was a couple minutes ago. There you go. Okay, so about 1,000 extra right now as my Coinbase app is telling me right now. But as you can see, at the top, this account was at 53.6, right? And as of like just now, we just took a big old dive, right? All the way down to 45.7 at its lowest. So it's times like this when you really got to know why you're in the game to begin with, right? And you got to have a clear idea of why you hold cryptocurrency, why it's worth holding cryptocurrency, what the value proposition here is. That's what this whole video is going to be about. We're going to talk about, crypto and why one might consider holding it in 2021 and what the upsides and downsides are. And why in times like this, where you see something like this massive crash around here, why you'd still continue to hold it. So if you look at the account, kind of, had a lot of volatility recently. I've kind of let the volatility do its thing a little bit just to see how the assets perform when left alone. But as you can see, kind of the whole market across the board right now is pretty down. Everything I own, and if you go towards the things that I don't own, I mean, just about everything is totally just off, right? The whole market is just destroyed. There's a couple of things, the Graph, Filecoin, there's a couple of things that have done pretty well during this short period. And these are largely some of these smaller coins. There are definitely blips here where you see some success. Holy Jesus. I'll have to look into why exactly this just doubled during the time that everything else went down. This whatever request is up 200%. That is absolutely nuts. Couple of things. The Ethereum name service is a new one on Coinbase that's gone up during this period. But I gotta wonder what the origin of all this is, because there's actually a pump period preceding this massive dump that just happened. And the reason that Basic Attention Token, one of the coins that I currently hold, is actually showing an up by 18% is because earlier in the day, it was up by like 50%. So this is actually like a 30% dump for Basic Attention Token as well. But really the big news here is that Bitcoin went down. And as we know, Bitcoin kind of leads the market. Bitcoin makes a big difference here. And then realistically, this big, massive dump from, 59,000 earlier, yesterday afternoon, to all the way down to, I believe it is as low as 54 earlier. Wasn't it even a little bit lower? I don't know, but 54. It's down to the 54,000s. And this 5% drop in Bitcoin makes the whole market just dump like crazy. And that's going to be the case, at least as long as Bitcoin is, as dominant as it is. But as you can see, if you go all the way through, you still have a 52,000% gain on Bitcoin. And this brings us to obviously the number one thing that brings the vast majority of people into the crypto market. And that's the draw of asymmetric returns. If you'd held all the way down from, and this, by the way, is only since, 2014 and to 2013, when you were still back at around, the hundreds. Bitcoin before all this was even lower, and the overall return for Bitcoin, as we'll see in a couple minutes, is actually drastically more than this. But a lot of people only got in after that 2013 bull run that started to really prove that Bitcoin could go really, really high, a lot higher than those smaller numbers that it was putting in earlier. And so that's obviously the initial draw. And Bitcoin has been around since about 2009. back in that first recession. So it was born into a recession. It's gone through black swan events and recessions since then. And you still see this massive overall return, which seems to only be going up over time. Long-term holders have done really, really well with Bitcoin. But, Bitcoin is not the full story. I would say that it's not even most of the story. Ultimately, Ethereum has been around, for less time than Bitcoin. It has less of a track record. However, Ethereum has actually outperformed Bitcoin. In fact, by like triple in roughly the same time period since about 2015, 2014, end of 2014, 2015. Ethereum has seen a 150,000% gain. So these are massive gains, right? If you were to invest in the stock market over this same period, you wouldn't even be close in terms of these returns. And that's the next thing. So this is basically a chart from Charlie Bilelo on Twitter that basically shows long-term performance of various different asset classes. And that includes everything from commodities, cash, gold, which was the old inflation hedge. And we'll touch on that a little bit more as we go through the video about how gold is no longer being seen this way. And this chart kind of sums it up. It kind of shows you everything that you kind of need to know, right? Since 2011, the cumulative performance of the NASDAQ 100 has been about 540%. Right? That's pretty freaking good. That is outperforming all these other things. U.S. large cap, U.S. small caps, U.S. REITs, which we've talked about on this channel before, real estate investment trusts, another way of investing in real estate without really investing in real estate. It's more of an income play that's still super liquid and doesn't have the tax advantages of actual property ownership. But as you can see, these are well ahead of gold, right? Gold is all the way down here. With a 16% return since 2011. And that's not very good. That's really not very good. Annualized 1.5% over this period, which is not keeping up with inflation. The idea that this is somehow an inflation hedge is ridiculous, and people are starting to realize that, which we'll take another look at, like I was saying, a little later. But really, the main point of this entire thing in the last 10 years is that Bitcoin is at hold on. Did I misdo this? Holy shit. 20 million%. Yeah. So this is a 20 million% return versus a 540% return. This is not comparable. You see what I'm saying? Like, we're not even in the same hemisphere. We're not in the same area code. This is a 20 million% return versus a 500% return. Traditionally, you would invest in something like the S&P 500 or the NASDAQ, these broad market index funds that, consistently have a positive return, that do consistently outpace inflation. If you look at that, that's a 20% annualized return. That's in a traditional market like the NASDAQ, in the stock markets or whatever. These are good returns. It's not that those aren't good returns. If you hold over the course of 30, 40 years and you're getting set for retirement, and you want something that has, literally just like a very long track record that can grow your money over time and get you in a good place by the time you're ready to retire, these are typically what people will tell you to invest in. And there's a reason for that. It's not that it doesn't work. It's just that if you compare that to Bitcoin, 500 to 20 million, we aren't comparing apples to apples at any point anymore. They look similar, but they're not the same thing, right? This is comparing apples to golden apples. It's not close. So this is the draw. This is admittedly the draw of something like Bitcoin, of something like anything in the cryptocurrency market. And this is specifically Bitcoin, but if you look at, Ethereum in the time that it has existed, versus Bitcoin in the time that they've both been together and existed, Ethereum has outperformed Bitcoin consistently as well. So, you think 20 million to 500 is a remarkable, asymmetry there, a huge difference. Ethereum is once again, like twice again, even more, of a, return. So, I think this really just says it all. This really just says it all. But a lot of people aren't going to be convinced by this because ultimately there needs to be a reason why it went up 20 million% in 10 years, right? There needs to be a reason. This needs to be headed somewhere. There needs to be some utility. And the justification behind these lower yielding things is that there are something real behind it. Obviously, gold is gold. These commodities are commodities. They're physical things that you can own. And the companies behind REITs, large cap stocks, small cap stocks, the NASDAQ 100, is that they have a price to earnings, right? There's these prices, but ultimately the reason that they're fairly or unfairly valued is because they earn a certain amount of revenue. And they bring in money, and they should be worth a certain amount if you buy into these companies, just because of the fact that they are, cash flow generating businesses. And if they happen to give you some of those things as dividends, it's coming from a place of we earned this money and we have it left over to actually give you, but it was earned through actually selling something. It was earned through actually contributing some kind of value. And a lot of people approach the cryptocurrency market in general with the idea that this is all just bubble gains and, there's no underlying value. So this should be zero, but because people have bought in, it's 20 million. And that's one of the big things that I want to tackle with this video, is the idea that this should be zero and that at some point it'll crash all the way back to zero. Now, with a trillion plus market cap at this point, with the types of advances in adoption that we've seen lately, the short pitch is that with the types of adoption that we've seen lately at nation states, companies, all this stuff buying in, zero is no longer a realistic possibility even, right? And ultimately, that kind of structure where people buying in raises the price, and if enough people were to, sell, the price would go down and potentially all the way to zero. That conceptually is still how the stock market works. If you think about it, that's exactly what it is. The step that separates the stock market, at least, in theory, from that type of just base Ponzi scheme, is the fact that those companies are meant to have some value that they contribute. And so they're not supposed to go to zero unless the fundamentals of the company change. And they actually stop being able to sell their products and stop growing their business. Now, I'm going to make the argument that with good cryptocurrencies with solid fundamentals, the same thing applies essentially. Bitcoin is the example that's used here, but we're also going to make sure that we touch on other major cryptocurrencies that have good fundamentals. So this is the introductory thing, right? And this is the next thing to look at is the price of different cryptocurrencies versus other types of assets that you can hold, right? So gold is this big thing that's at $11 trillion in market cap. And that eclipses something like Apple, which is one of the biggest companies, I guess essentially the biggest company in the world right now, $2.6 trillion market cap, with Microsoft just a little bit behind at $2.5 trillion market cap. And then, Alphabet, Saudi Aramco, Amazon, and then silver. And then Tesla. Tesla is essentially shooting up like some kind of, like a crypto almost at this point. And that's at 1.1 trillion. Bitcoin was at 1.1 trillion recently. After this, this started dipping recently. And this is at the price of 54,000. This dip puts it below Tesla, but it was recently above Tesla and approaching silver. So the takeaway point from this being just that it is utterly massive at this point. $1 trillion is pretty significant. It's bigger than a lot of these other names. It's bigger than Facebook. It's bigger than Nvidia. It's bigger than Warren Buffett's Berkshire Hathaway. Bigger than Tencent. Bigger than JP Morgan Chase. It's bigger than literal banks and pharmaceutical and chemical companies. It's bigger than a lot of these massive household names. It's bigger than the entire palladium market. I mean, some of this stuff just puts it into perspective. It's utterly incredible that it's come as far as it has. And then you see the second place crypto with the second biggest market cap, even with this dip, where it's almost getting to $4,000, which is an excellent price point for Ethereum, by the way. Very underpriced. Ethereum is still bigger than Visa, Home Depot, Spider, the ETF, Johnson & Johnson, Samsung, Walmart. It's crushing all of these by large margins, right? And it's only headed up. And Bitcoin, digital gold that it's potentially seen to be, is projected by Cathie Wood, that 500,000 price estimate. This is essentially taken by saying that Bitcoin with its properties should at least have the market cap of gold, which is essentially a 10x from this 50,000 price point, which brings it up to around 500,000 in market cap. So if it catches up with gold, becomes an $11 trillion asset, that's the price that it would be, which is another 10x from here, which it easily could conceivably get to. As the rate of new Bitcoin being issued goes down with each halving, the scarcity is programmably increased, and the price is expected to appreciate, especially as people buy in. And this is essentially the next phase of what I want to talk about and really, really focus on. Part of the difference between something like Bitcoin and a straight up currency and like fiat currency, a big thing there is adoption. Adoption is a huge thing that sets apart these different asset classes. And I don't really want to talk about just Bitcoin when we talk about cryptocurrency and this stuff, because ultimately Bitcoin is just one part of the picture. Because of its significant dominance, oftentimes in the 40% plus of the crypto market cap, we focus on Bitcoin. And it's important to have an idea of where Bitcoin is headed, at least right now, the way the market is set up. Because ultimately, as you saw when we were looking at the market a moment ago, everything followed Bitcoin. Bitcoin dropped all the way down to 54,000 and the whole market dipped, right? You saw this massive sell-off in the entire portfolio. And then when we went through that Coinbase, all those different assets, they all went down. And so eventually that is probably no longer going to be true as Bitcoin's dominance goes down. And which coin is going to flip Bitcoin? It's probably going to be Ethereum. We'll see. When that happens is still up for debate. But let's focus on adoption for a moment. And let's focus on adoption from Ethereum to start with. Because actually, given that Ethereum has that smart contract functionality, being a Generation 2 blockchain, it has been one of those first big cryptocurrencies that's actually courted the business of banks, investment banks, and stuff like that. These big players in the traditional financial world, the places where a lot of the big money is going to come in. This is the page that Ethereum has for its Enterprise Alliance, which is specifically geared at addressing this question: how far is adoption gone? As you can see here, we have some big names, right? So we have AMD, we have the Bank of New York Mellon, Consensus, another bank, Ernst & Young, another big investment bank type name, FedEx, JP Morgan Chase, Microsoft. Some of these companies that Ethereum has already passed in market cap, some companies that they have yet to pass, but will likely pass potentially this cycle. A bank from Russia, another bank. Some of these also that are not highlighted are also investment banks and stuff like that, financial institutions that are asset managers that manage hundreds of millions of dollars. VMware, you may have heard of them. And then also a bunch of blockchain projects that are also in the crypto world, right? So Polygon is an Ethereum layer 2. MakerDAO that does the DAI stablecoin environment, which is a stablecoin that is collateralized by other cryptocurrencies as opposed to actual fiat currencies. So I'm actually going to do a separate video on stablecoins because it's actually a really interesting space. But Maker's DAI is collateralized by things like Ethereum. USDC at this point is like 60% of its collateral, which that whole makeup and how centralized it's become is part of why I've actually, if you notice in my portfolio, I now hold more USDC and I don't really use Maker DAI anymore. So we'll make a video specifically on why that is. And then the Graph, Chainlink, which is, once again, the king of all Oracle plays right now. Aave, which is a liquidity lending platform, really, really big on that. Barnbridge, another layer one cryptocurrency. So as you can see, a lot of large companies at this point, including banks, as far as we know, that are officially in the Ethereum Enterprise Alliance. And this is just what's in the EEA, right? So there's a lot of banks that are at this point offering cryptocurrency, buying opportunities directly to its clients. And this is just what's actually partnered with Ethereum. So that's one thing. As we move on, we'll come back to that in a second. Time Magazine recently, Time has held Bitcoin for a while at this point. It's already on its balance sheet, but they've recently announced that they are going to hold Ethereum on their balance sheet as well, as part of a deal with Galaxy Digital, which is meant to actually address some of this recent talk about the metaverse. We'll have to talk about that a little separately. It's a whole nother push. Ever since Facebook decided to call itself Meta, and now they're going to push about the metaverse. I mean, that's where Decentraland, earlier it was in the 560 range. They had this massive pump. The large metaverse plays have really benefited from Facebook getting into the game and drawing attention to the idea of a metaverse. There was an interview with Disney CEO recently where he basically said, hey, we want to go into a metaverse play type thing ourselves. But to kind of put into perspective how early this is, he said that, and then he essentially implied in a couple sentences later that we're not really sure what that looks like. What does a real metaverse play really even consist of? They're willing to throw money at something that they essentially don't really even know what they're talking about. So it's become a bit of a meme at this point, this whole metaverse thing. How long will it last outside of any Facebook hype? We'll have to see. But ultimately, the news here that I wanted to highlight is that not only is Bitcoin being held on people's balance sheets, which is multiple companies are doing that here. It's not just MicroStrategy and Michael Saylor anymore. Multiple companies are holding Bitcoin on the balance sheet. And now Ethereum is also getting on companies' balance sheets. Companies that you have heard of, right? Household names. For quite some time, Grayscale has had a Bitcoin trust. They have $36 billion under management in just their Bitcoin trust. And not only do they have a Bitcoin trust, they have Bitcoin Cash. They have Basic Attention Token. They've diversified into Chainlink, Decentraland, Ethereum Classic. And obviously this Decentraland trust has recently just been doing ridiculously well. And for whatever reason, they think Stellar Lumens are going to do good. Better than XRP, I would say. Whatever. Anyway, they have multiple assets that they are providing exposure to through a trust. This is important. This is important that there is a trust here. Just because different types of institutions can invest in different types of assets. There's the Bitcoin Trust, and then as you may have heard recently, there's a Bitcoin ETF. Now this is a futures ETF. It's a Bitcoin linked ETF, and there are actually multiple of them at this point. This is just one of them. This is the ProShares Bitcoin Strategy ETF, but there's like 4 or 5 that came out. I'm sure there's more by now. But these are futures linked ETF that doesn't hold physical Bitcoin. It trades Bitcoin futures. This is an inferior product, and we'll make a separate video discussing why that is. People that are in the Bitcoin space don't necessarily want a futures-based ETF. It doesn't hold physical Bitcoin. It's not as good for Bitcoin overall, but it is an important on-ramp because there's trusts and there's ETFs, and there are institutions that can invest in a trust, and there's institutions that cannot invest in a trust, but they can invest in an ETF. And a lot of these institutions are not yet ready to actually hold Bitcoin physically. So these types of instruments are the only way that some of these companies can actually get in. And so the fact that a trust exists is important. The fact that an ETF at all exists is important because it draws institutional money to this space. I don't think this is really what retail investors are really going to jump on. The fact that an ETF came out didn't really hike the price up, and I think there's a reason for that. There's no physical Bitcoin being held. and really, it's not something that a lot of people are going to want outside of physical Bitcoin. This is something Grayscale is trying to do. They were talking about trying to get their Grayscale Bitcoin Trust converted to like a physical Bitcoin ETF by December 24th and make it like a Christmas Eve present. Is that going to happen? Probably not. Probably not. I mean, this is all pretty unlikely. This is all just kind of backpacking off the news that we got that Bitcoin-linked futures ETF. And it's, good on them for trying. It's good on them that they straight up, have filed at this point. This is important. I doubt that it's going to work. I doubt that we're going to get a physical Bitcoin ETF until maybe next year at some point. But the important thing that I want to point out with this is that there's more on-ramps to this type of thing. To get companies exposure to Bitcoin and have institutional adoption. Companies are actively working to have more Bitcoin exposure at this point. And it's not just companies, it's literally countries, right? Literally countries. El Salvador at this point has made Bitcoin legal tender. Now, this is a move that, not everybody agrees with in the country itself. There have been protests. And part of the reason for that is that apparently there is a fine associated. I'll have to look into this more. Don't take my word for this. This is something I meant to read into a bit more, is that there's apparently a fine associated with not accepting Bitcoin. And if you accept Bitcoin and a crash like today happens, if you're a business, you need the money now and you want the money at the value that, you sold something physical for. But this is huge, because this has introduced a great many people to Bitcoin, has given a lot of people Bitcoin wallets, and it gets people into the system. It gives people exposure. And ultimately, it's been, at least from a straight up wallet standpoint, a huge success, right? There's more Bitcoin wallets than there are people that have banks. And this kind of, let's bring it back to the previous thing that we skipped over, is use cases for cryptocurrency. So we've been talking pretty much exclusively about Bitcoin, and banking the unbanked is something that's really important, something that cryptocurrencies and Bitcoin specifically has been trying to do. But you don't just use Bitcoin for things like this, and there's a lot of things that Bitcoin is not really the optimal currency for. So there's obviously things like Ethereum, IOTA. Not that IOTA is necessarily a really big player at this point, but banking the unbanked, really big for Bitcoin, right? And then Ethereum, a decentralized application, a decentralized network for applications of smart contracts. We've talked about these value propositions in the original cryptocurrency video. You should definitely go back and take a look at that. But ultimately, adding the smart contract functionality to a blockchain network is really huge in terms of being able to do things on it. Smart contracts can be used for actual contracts. They can be used for all manner of things, right? The more you realize that smart contracts is just programming that allows you to build any functionality that you want, essentially using, in this case, the Solidity programming language. You can do gambling with it. You can do gaming with it. You can do financial transactions with it. You can do anything. You can do just about anything. You can do anything that you business-wise that you can think of. And then there's blockchains like IOTA that are specifically targeting Web 3.0, the Internet of Things, and IOTA is actually not even a blockchain. It's a acyclic graph, a DAG, but it's a cryptocurrency. It's not a blockchain based one, but it gets kind of lumped in with those types of projects. But there's stable coins, which we've talked about. They're more directed towards the medium of exchange functionality. Digitized metals, there are actually cryptocurrencies like Lern that are kind of based off of gold. And then personal finance, which we just talked about, smart contracts. This is kind of downplayed. I mean, smart contracts are huge. You can, like I said, really, really use them for just about anything. Tether is something that we're going to have to talk about. I don't really want to touch too much on that right now because ultimately Tether is a little questionable as a stablecoin. I'm not a fan of Tether, but USDC obviously I do use. And frankly, I would kind of stay away from Tether. We'll talk about that separately. Not financial advice, but I wouldn't use Tether so much. But the point being that cryptocurrencies do have real life applications. The store of value function of Bitcoin, it's programmed scarcity, more or less gives you an elimination of the supply side of things and allows you to model the price using primarily just demand modeling. And that's really good for store of value. But Ethereum adds to that by letting you do things with your value. It's uncapped, but the burning has actually made it deflationary. They're actually burning more than we're using. And once we switch over to proof of stake, that may catch on fire and cause it to go parabolic. We'll see. But there are real uses. The point here is that there's real uses outside of just price speculation. It's not just, I'm going to buy in and hopefully the price goes up and then I get out before everyone else gets up and it's just greater fool investing. There are definitely cryptocurrencies, and I would even say the vast majority of cryptocurrencies on the market. There's thousands of cryptocurrencies. The majority of them are bunk. A lot of them are just straight up Ponzi schemes. They don't have any realistic project. They don't have any realistic roadmap. They're not actually trying to achieve anything. A lot of these are straight up scams. Know that. A lot of these nano micro caps where the team is just inexperienced, they don't really have any plans of adding functionality and actually gaining this type of adoption. A lot of these are straight up scams. A lot of these are just not worth putting any money into. Even when you see the price speculation, make them go parabolic, it's just that. It's really just a Ponzi scheme. But what you're looking for, as you've seen in my previous cryptocurrency video, is these types of use cases that allow you to assign real value. And Ethereum is an excellent example of that. Cardano is an excellent example of that. Solana is an excellent example of that. There are many of these coins that have real value because they actually do something and they have adoption. That's really important. So let's go back to adoption, right? So El Salvador so far is the only full country that has actually made Bitcoin legal tender or made any cryptocurrency legal tender, allowing you to pay your taxes with them. There are, as we covered before, actual other, I think it was Switzerland, where a part of that you can actually pay your taxes with Bitcoin. And then there are various food chains and stuff around the world, especially in some of these South American countries where McDonald's or Burger King or individual stores or whatever have accepted Bitcoin as payment for various things. And there are other countries like Brazil, Mexico, Paraguay, Panama that are considering further Bitcoin adoption, potentially making them legal tender. And none of them have done that yet, to be perfectly clear. But a lot of these Latin American companies, countries like Paraguay, Panama, Brazil would be a big one. They have amazing population. They have a massive population, right? They have a lot of people. That would onboard literally millions of people onto the Bitcoin network. It would be huge in terms of the network effects. They're, not the biggest GDP country, but the network effects on that would be massive, right? And these are politicians. Right. What this article is pointing out is that politicians in various countries have essentially tweeted out, started adding laser eyes to their pictures and tweeting out their pictures with laser eyes. Right. When the leaders of your country start putting that in, that's kind of a sign that they're starting to think in that direction. And Bukele was the first to actually act on it, and he's kind of acting real hard on it right now. He wants to set up the volcano mining and make a Bitcoin city. It's a really weird, it's an idea that's interesting. It's going to have to be fleshed out a lot because right now we don't really know the details of the Bitcoin city. But as you can see, Bukele and El Salvador are all in on Bitcoin, very all in. They believe in Bitcoin. They're true believers. And if we start getting these other countries, starting to adopt Bitcoin as legal tender. Once even a second country starts adopting that, if another country genuinely starts to put this into motion, I mean, I think that's a wrap. Once we have multiple countries, that momentum is going to build a lot. I think Uruguay was actually actively working to introduce a bill in their legislative bodies to actually adopt Bitcoin as legal tender. We'll see. And it might not just be Bitcoin, although I think Bitcoin is the most likely to start seeing this type of adoption. And we also know about Cardano, right? They have that whole education credentials kind of thing going on in Africa. And that has actually been enacted at this point, but that's not legal tender. It's just using the blockchain for functionality, right? To actually track people's credentials and education so that they're not falsified and get rid of that kind of fraud. And then in the United States, right? These are all other countries, but the United States is where a lot of this action is where a lot of stuff kind of hinges on how much adoption there is here. And so we actually now have a senator who openly says that she owns Bitcoin and that other people should buy and hold Bitcoin for retirement, which, by the way, I think personally, not financial advice, but I think that's a great idea. Long-term holders of Bitcoin, as we saw earlier, have seen by far the most return. Long-term holders have been making out like bandits. And holding Bitcoin instead of stocks, imagine how that could move up your retirement timeline. If you wanted to get financially independent and retire early, you wouldn't have to wait till 65 anymore. Imagine if we were using Bitcoin and, you're, instead of getting a 500% return every 10 years, you're getting a 20 million % return in 10 years. You could join the workforce and then get out 10 years later and you'd be comfortable afterwards. Now, the idea that this would be able to sustain, indefinitely, that's probably not going to happen. We're going to have to see how Bitcoin goes. Once we get to around 2140 or so, when new Bitcoin stopped being issued, price might skyrocket. But even if price skyrockets at that point, there's a limited number of 10Xs that's actually still going to be in Bitcoin at some point. It's not going to go up indefinitely. That's not realistic. But at least for the near future, for people in our lifetimes, right now it's 2021. I'm probably not going to be around at 2140, right? So at least in our lifetimes, holding Bitcoin and holding till retirement, it's potentially an interesting idea. But this is Republican senator, by the way. I was always kind of surprised by this. Some of the people who are actually standing up for Bitcoin in our legislative bodies here, people like Cynthia Lummis and Ted Cruz, it's weird to agree with Ted Cruz on anything. I feel dirty saying it, but I mean, yeah, they are into Bitcoin, and I happen to think they're right about that. But they've straight up said that you should buy Bitcoin and save it as part of a retirement plan. Cynthia Lummis herself bought Bitcoin. Her first Bitcoin was bought in 2013. She's one of these long-term holders. She's up a crap ton on her investment. $330 for one Bitcoin. She's up massively, like tens of thousands of dollars per Bitcoin. And now she has 5 Bitcoin, which is closing in on, $200,000, $168,000 at the time of writing for this. 5 Bitcoin right now, what is a lot, but it's not $168,000. Is it 5 times 54, 25? Yeah. So definitely not. But fuck, now this is going to bother me. Yeah, holy shit, is way more. So almost $300,000. So she's doing really fucking well. Sorry, I haven't done math since fucking high school, college. Well, that was calculus 3, so I was doing letters. So actual numbers math, I guess high school. Anyway, so she's making out like a bandit, and she sees the point of Bitcoin as a store of value. And she buys and holds. And she's probably above that $270,000 mark at this point. She's probably buying more and holding more. And if she's buying this dip right now, she's going to be well ahead in the future, right? So our senators are also getting into Bitcoin. Is the United States going to adopt Bitcoin as legal tender? Not not likely, at least in the near future. It doesn't look like our political climate is really conducive to that right now. Actually, recent cryptocurrency legislation is pretty controversial. It actually seems like they might be taxing us drastically more and qualifying us all as, brokers or something. And so we'll have to look into that story separately. I doubt US is actually going to do it anytime in the near future. They want to do like a CBDC, it seems. But CBDC is still crypto. It's basically a stable coin, a fiat-backed stable coin. But Bitcoin adoption is the point of all this, right? Bitcoin adoption is really picking up on the national level, on large company level, and there's also large asset managers, right? Jeffries is selling gold in favor of Bitcoin. This is what I was talking about earlier. Gold, as you can see, has really fallen down when it comes to hedging against inflation, preserving purchasing power over the last decade. It has really been underperforming. And this is not just over the last decade. This has been longer than that. Gold is not what it used to be. It's not making your money grow the way it used to. It's really not doing you any favors if you hold gold in your portfolio. Asset managers like Jeffries cannot look at something like this and see 16 versus 20 million and still think that it's a better idea to hold this 16% versus this 20 million, right? It's not close. And at some point, it hurts too much to look at that number, right? And they actually announced before this that they were selling gold in favor of Bitcoin. They're doing it again, right? And so this is really something, right? Back in 2020, they started selling gold and started buying Bitcoin. And now they're continuing to do that. They're cutting their losses on gold and buying Bitcoin. This is the weird thing about people like Peter Schiff, who absolutely maintain that gold is the hedge against inflation. It doesn't make any sense. And even large financial groups like Jeffries have to now admit that it's not worth holding gold anymore. It's just not worth it. You got to hold Bitcoin. It's worth way more than gold. It can be transported without anything, right? No cost. You can take it anywhere in the world. You can send it anywhere in the world instantaneously. No cost, right? You can't lose it. It won't be destroyed by natural disasters. You won't lose it that way. You can lose your keys. That can absolutely happen. But in terms of actually using it, transporting it, storing it, requires way less than gold, right? And it's been outperforming gold drastically to the point where it's not worth having gold anymore. If you have access to Bitcoin, which if you have access to gold, you have access to Bitcoin, you should hold Bitcoin instead. And is what roughly the message that institutions like Jeffries are sending when they do something like this. If they have a massive supply of gold and they sell that for Bitcoin, it sends a very clear message. Bitcoin is the way to go. Remember, once again, I am not specifically saying that you should always, go into Bitcoin as your main thing. There are other good cryptocurrencies that probably have way more upside, more use cases, and, may well overtake Bitcoin and flip Bitcoin in the future. It's not that Bitcoin is your only option, but cryptocurrency in general shares a lot of these properties that Bitcoin is being adopted because of. But this adoption by itself is something that, elevates Bitcoin. The fact that countries are making it legal tender, large financial institutions are putting their money in. This is where the price goes up, and this is where the network effects start to make the network more valuable in terms of what it can do. So once again, another point for Bitcoin in terms of adoption. And if you think it's too late to get into Bitcoin because it's at 50,000, remember, even if all it does is match the gold market cap, we have another 10x from here. That's fantastic. Yes, it's not a million X. Yes, you're not going to become a multimillionaire overnight. Yes, you're not going to become a multimillionaire necessarily, even in the next decade if you don't have enough money to put in. But it's still a lot. Compared to 500% over 10 years with the NASDAQ, that's still more, significantly more, right? And so we are in early days we should actually remember that we're not just, at the tail end, right? We're still in early days, especially because Bitcoin is not just a token that has value. It's a network that has network effects that improve its values. And so, as we see here by a former Google employee that's been analyzing the adoption rate of Bitcoin and comparing it to technologies like internet, PayPal, mobile phones, Bitcoin is being adopted faster, right? In only 12 years, Levin, there's the analyst here, he estimates that BTC reached about 135 million users with projections to have 1 billion users by 2025. And as you can see in the chart below, we can see that in the same point of its adoption curve, it took 7.5 years to reach 1 billion users. And we all know how big the internet became, right? Bitcoin got to that same point, or will get to that same point if you project out its user numbers in about half the time, right? So from 2010 to, from 2021 to 2025, it goes from 130 million to 1 billion. The internet took 7.5 years to go from 130 million to 1 billion. And so Bitcoin is going to do that in 4 years. That's pretty good. It's a little over half, but it's close, right? And so you can see the phases of adoption, right? This is kind of more of a generalized thing. If you break it down, there's the early adopters, there's the there's the innovators that were really, really early. Very few people were on that bandwagon. I certainly wasn't. There's the early majority. There's the late majority. There's the laggards right at the end there, right? So there's going to be, we're still in this early majority. We're going to go towards the late majority, that late 34%, maybe in the next cycle or two. Actually, probably in the next cycle, I would imagine. But we're still in that early majority. We're still in early days, right? So we have a lot of way to go, right? And so this kind of encapsulates that a little bit. By 2023, Bitcoin is going to be mainstream. And by 2025, it will be omnipresent, just like the internet. Why does this keep doing that? God damn it. But yeah, so it's 2021, and Bitcoin is already starting to become mainstream. We saw Crypto.com buy literally a sports stadium and take it from Staples and name it the Crypto.com Stadium. This is a huge on-ramp for people. People are going to know about that. Now, the CRO token has been benefiting drastically from that. The price has been pumping like crazy lately. But it's not just crypto, CRO that's actually going to benefit from that. Crow is a platform, right? Crypto.com is a place where you can actually buy crypto. Bitcoin used to be hard to get into. You have to actually ask around to see, like, how do I get Bitcoin? How do you even do that? It used to be multiple steps. It used to be difficult. Now, you just go to Coinbase, make an account, hook up your bank account, and 5 minutes later, you can now buy crypto. It's really easy now. Not only is it really easy, you see news stories about cryptocurrencies, and not just Bitcoin, but Ethereum, right? You go to, MSNBC, the finance channels and stuff like that. It's mainstream. They don't just talk about ticker symbols for companies anymore. They put Bitcoin and Ethereum USD trading pairs up there and look at the price in real time. That's something they do now. Bitcoin will go super mainstream by 2023, and by 2025, it will be omnipresent at this rate. And if anything, this rate might be accelerated because, once again, there's not only that token and price speculation function and that store of value, it's actually a network that can be used for things, especially with the recent Taproot upgrade that allows it to be more functional and more private. And so, moving on, institutional money is pouring into the crypto market, and it's only going to grow. Right? So likely all of this stuff is underestimating how much adoption and how quickly that adoption is going to happen. And this has been driven by a number of factors, led by the outstanding performance of Bitcoin relative to any other asset class on the planet. Let's say crypto in general relative to any asset class on the planet, because obviously, like I said before, Ethereum has outperformed Bitcoin its entire existence, right? And so at this point, the smart money, as we've seen in those last couple of tabs, has been allocating to Bitcoin as a way of diversifying their portfolio and beating inflation. And as we've seen CPI go up over 6% in the last month, beating inflation is becoming more and more of a concern. And so this article was written in, I believe, August. And at that point, we're actually a couple months later now in November, there had been $17 billion worth of institutional capital that had just this year. It's more than that now, right? A recent study conducted by Fidelity Digital Assets found that 7 in 10 institutional investors expect to buy or invest in crypto assets in the near future. 7 in 10 institutional investors. That sounds like acceleration of adoption to me. Now, just over a third of respondents in a different survey said that involvement of more leading corporates and fund managers has given them greater confidence to invest. And so there's going to be a lot of retail FOMO. And as we see with once Bitcoin starts going parabolic, the retail FOMO that we've seen before is going to be nothing compared to what we see now, because we have so many more on-ramps to the cryptocurrency market. And another really huge thing that we're seeing here is that Blackrock is diversifying into cryptocurrency, right? They are the biggest asset manager in the world. Blackrock is the name in asset management right now, right? They have $9.5 trillion in assets under management, and is one of 16 mutual fund managers, including Morgan Stanley, to gain exposure to the crypto market via its global allocation and strategic income opportunities funds, which have a collective worth of over $40 billion. This is the type of money that's going to start flowing into cryptocurrency at this point. They are also indirectly exposed to Bitcoin via almost a 15% stake in MicroStrategy. So this is Michael Saylor's company, which has over $3.4 billion of BTC on the balance sheet. I think they're over $4 billion at this point. MicroStrategy has been crushing it. They've been buying a crap ton of Bitcoin lately. They've just not stopped, really. And so this is the next point that I want to move on to, right? Replacing the legacy plumbing in institutional financial services infrastructure, right? So this is another big point that people have been harping on lately, is things like sustainability and energy use. So once again, let me give you the short elevator pitch here. The point is not to have just DeFi and cryptocurrency kind of operations next to CeFi, centralized finance operations in these banks that are now putting their money into this, because that's the next thing, right? The point is to replace them. Part of why people FUD cryptocurrency and Bitcoin in particular, and talk about how it takes up too much energy. It's more energy than certain small countries, which is technically true. So like Malaysia or Sweden, is that I think people want to look at it that way because the banks want us to look at it that way. Because if it's like, oh, well, this other thing is starting to use more energy, look at all this extra energy that we consume. Well, they're trying to distract from the fact that eventually we want to get rid of them and mainly use our energy for Bitcoin and stuff like that, which is actually more energy efficient than the traditional finance system, right? So it's not that we're just going to have both eventually. Eventually, we're going to have one and very little of the other. It's not like traditional finance is likely going to disappear entirely within our lifetimes. I mean, who knows? Maybe it will. That would be a really surprising outcome. It would be an interesting outcome. See how that plays out. Because with smart contracts, you can essentially do anything and everything that the traditional market does better in a decentralized fashion with no trust involved, right? And so how much energy does this actually consume? So according to the CCAF, Cambridge Center for Alternative Finance, it consumes about 110 terawatt hours per year, which is a lot. It's not a small amount. It's 0.55% of global electricity production, or roughly equivalent to something like Malaysia or Sweden. So yeah, entire countries. Once again, the traditional finance system uses way, way more than that, right? And ultimately, it depends on how you feel about things like Bitcoin. If you are of the opinion that it's just a Ponzi scheme and that criminals use it for money laundering or something like that, then you might think that this is wasted energy. However, If you think that it's useful for things like escaping monetary repression, outpacing inflation, capital controls, escaping capital controls, you might think that this is energy well spent. And if you look at all these other use cases that we've gone over, it's hard to argue that it's not energy well spent, in my opinion. And there's a couple of extra points to note about this, right? Energy consumption is not the same as carbon emission. Remember, not all of this electricity that's used for Bitcoin mining, a lot of the electricity that's used for Bitcoin mining, is not, high carbon emitting sources like natural gas or coal and stuff like that, right? A big example of that, and by the way, it's hard to estimate how much exactly is using renewable energy, right? So a lot of these estimates vary very widely. A 2019 report said that 73% of that energy consumption is essentially carbon neutral. That's a high-end estimate. But another estimate in September 2020 said it's probably closer to about 39-40%. But that's, it's hard to tell because miners don't necessarily report what kind of energy they're using to mine Bitcoin. And ultimately, another point that should be made here is that Bitcoin can use energy that other industries can't. We don't have to transport the energy a long distance to use it at a certain site. Bitcoin can be mined wherever you got a computer, essentially, that has the capability to actually do the mining. It can be mined anywhere. Hydropower is a well-known example of this, right? Production capacity massively outpaces local demand in certain areas, like in China. And battery technology is far from advanced enough to make it worthwhile to store and transport energy from certain rural industry regions into urban centers that need it. And so this is part of why certain places in China are kind of big hubs of Bitcoin mining. And hydro is not the only example. There's flared natural gas, right? So there, you sometimes in the production of oil extraction, you produce natural gas that gets combusted, and it essentially becomes waste, right? It becomes pollution and doesn't ever make it onto the grid. And because, they're constrained by the location of remote oil mines, it's essentially just, not energy that you could ever leverage. But at this point, with Bitcoin, with cryptocurrency mining, you can use that energy for a useful purpose. It was going to be wasted energy. And so this way, without actually necessarily using more unclean energy, you can extract value from the same operations you were doing anyway. And back of the envelope calculations suggest that flared natural gas, actually using it efficiently, in the US and Canada alone, can run the entire Bitcoin network as is, right? So that's kind of a big point there. Bitcoin mining consumes a lot more energy than actually using Bitcoin, right? A lot of the energy that Bitcoin consumes is not to actually transact and use Bitcoin, right? Traditional finance, there's plenty of energy that's actually used to transport money from place to place and stuff like that. Whereas here, Bitcoin, you mine it into existence, and that's the vast majority of the energy that it actually uses. Once a coin has been issued, though, the energy to validate transactions is very, very minimal, right? So Bitcoin is proof of work. Proof of work requires progressively more energy, but the actual use of the network doesn't actually require that much energy. And so it would lead you to some misconceptions if you simply take, how much energy was used and then divide that by the number of years that Bitcoin has been in existence, and then just call that the unit of energy consumption, just because that's just for the mining, right? Bitcoin mining, first of all, like we said, the mining itself is eventually going to stop. It's not going to produce new coins. But as we validate transactions, that energy is much, much less than actually mining it. And ultimately, runaway growth is unlikely. So there was a report a little while ago that made the claim that Bitcoin by itself could warm the Earth by 2 degrees Celsius. But this is FUD right there. That's some stuff that you really shouldn't listen to. It's nonsense. as has been common in many industries, the energy mix of Bitcoin grows less reliant on carbon every year, right? So over time, as renewable energy sources become more efficient, achieve grid parity with more traditional sources of energy production, the miners are going to use the cheapest form of energy they can to keep their margins as high as they can. And so they're going to migrate more and more to renewable energy, right? And so this is not a realistic projection, right? Many organizations within the mining industry have launched initiatives like the Crypto Climate Accord, right? So we're actually agreeing to try and keep this limited as much as possible and go towards renewable sources of energy. And as I was saying, as solar and other sources become more viable and efficient, we're going to use those more. And so, and as I was pointing out a second ago, the protocol is built to have the issuance-driven component of miner revenue every 4 years. And so that miner revenue incentive is going to go down. There will be less mining done over time. And ultimately, the hash rate of the network is going to have to be supported in a different way instead of just purely miner revenue driven. Yeah. So that's really important there. So the energy argument for Bitcoin specifically is not as big of a concern as a lot of people would lead you to believe. And remember, I was saying that Bitcoin is not the only cryptocurrency in existence. Cardano is 1.6 million times more energy efficient than Bitcoin, right? Like, as we go towards generation 2 and then generation 3, especially as Ethereum becomes proof of stake instead of proof of work, it's going to become much more energy efficient. Cardano is already well ahead of the game on that. It's proof of stake. The energy that it takes to actually run that network is nothing compared to Bitcoin. Remember, we said it was like 110 terawatt hours, right? And so Cardano's, Cardano's energy consumption is in gigawatt hours. It doesn't actually have the number here. I thought it did, but yeah, it's drastically less. It's measured in gigawatt hours instead of terawatt hours, right? It's not even comparable. If you look at a lot of these newer proof of stake chains, that's just the name of the game. This is standard for the cryptocurrency market these days. There are still proof of work coins like Ethereum Classic and Cadena and stuff like that are built to. Cadena is trying to build to scale using a proof of work algorithm. I mean, we'll see how that works out, but especially with the innovation of proof of stake and the game theory way of looking at it, energy efficiency has become very much a non-issue. Bitcoin specifically, it's more of an argument, but it's still not that much of an argument. Ultimately, moving over to cryptocurrency for especially decentralized finance and stuff would drastically reduce the carbon emissions from the finance industry overall. So there's that. And then there's the issue of volatility, right? This is, once again, specifically looking at Bitcoin, but similar trends can be expected in our other altcoins that become much larger, right? So there are those various functions of money that I covered in the cryptocurrency video initially. Among these are medium of exchange and store of value. So far, we've primarily talked about store of value. The medium of exchange was initially the big thing with Bitcoin, right? Well, they wanted to use it as actual money. They call it ultrasound money, right? But the narrative these days has very much shifted over to store of value as opposed to medium of exchange. Now, don't get me wrong. Obviously, with things like, Taproot and stuff like that, people are trying to move towards being able to use it as a viable medium of exchange still. And introducing Lightning Network and stuff like that are steps towards that direction. But frankly, I'm not even super interested in that for Bitcoin. Ultimately, the leading medium of exchange tokens right now are stable coins, which are essentially classified as CBDCs. And we'll talk about the validity of that classification in another video. But what I would point towards at this point is that over time, Bitcoin's price is going to stabilize, right? And stability in price is really the big source of where, El Salvador's citizens are less interested in Bitcoin as legal tender because of its volatility. It can take dumps like what it did, as I'm recording this video, this large multi-$1,000 dump that wipes out part of your value of a transaction that you just made for a real item that costs a certain amount, that you just essentially got less money for if you were to swap this out for dollars right there. Volatility is something that over time has gone down. As you can see, there was way more volatility in the beginning when Bitcoin first came out, right? Back around 2009, 2010, volatility on Bitcoin was spiking way, way, way more, right? But over time, we see this trend towards less and less and less and less volatility, right? Way less volatility. These days, the bigger spikes that we see now in 2020 are essentially the smallest spikes back in 2010. We're seeing significantly decreased volatility, over time. And so as these coins become larger and larger market cap, with more of the smart money, large institutional investors that would plan on holding for 100 years, we're not going to see nearly as much volatility. And as we get countries that will buy and hold for 100, literally centuries and millennia potentially, that volatility is going to go down. Now, are we going to get to a point where Bitcoin is essentially a stable coin? Not in our lifetimes. It's not going to happen. I really don't think Bitcoin's function should be emphasized as medium of exchange. Store of value, it has a lot better argument than medium of exchange, ultimately. But it has so much more utility than that. It shouldn't just be constrained to just, medium of exchange. I don't know that it's going to be the most successful thing for that. We have stable coins. If you really want a medium of exchange, we have trading pairs with stable coins and stuff like that. Should you be able to use these types of things for transactions? Fine, sure. But that's going to be up to the people who want to do it that way. Ultimately, I think as you emphasize that store of value stuff, I think it takes a little bit away from the argument as medium of exchange. Remember, back in the day, the first Bitcoin transaction was for a pizza. He paid 8 Bitcoins for a pizza. Think about that. 8 Bitcoins for one pizza. 8 Bitcoins now would make you rich, right? Well, not rich, but pretty wealthy, reasonably wealthy. It would buy you way more than a pizza. And so as Bitcoin becomes this highly valuable store of value, would you really want to pay in Bitcoin? Do I really want to give you my Bitcoin for pizza or any everyday item? No. I think as a strong store of value, I want less and less to use it as a medium of exchange. That's why I think de-emphasizing the whole medium of exchange narrative is appropriate. It's very appropriate. But for other coins, especially stable coins, medium of exchange is the primary way that you use them. You can also get interest on them and arbitrage different, deviations from their peg and stuff like that, which we'll talk in detail in another video. But basically, that's the story, right? So we started off talking about price appreciation, how it's a way better store of value and a way better way of protecting your purchasing power against inflation than any other asset class in existence. And this is just Bitcoin. This is just boomer coin, right? The slowest moving of the cryptocurrencies right now. There's other cryptocurrencies. Ethereum has outperformed this during its lifetime. Price speculation is not the only way to look at it. Adoption is another huge factor here. We talked about price speculation as a reason that people onboard into the cryptocurrency world. We talked about how the massive power of adoption and the various real life use cases bring real value to things like Bitcoin, Ethereum, Cardano, Solana. These are cryptocurrencies with real fundamentals, real projects that are actively working on them, that are potentially worth investing in, not financial advice if you wanted to, and that gives real weight as countries are starting to realize that these are real investments that are really worth using to do things that are, that are traditionally done with things like gold, like hedging against inflation. This is going to be completely impossible to ignore. And as Bitcoin eventually becomes omnipresent in the near future, by the way, in the near future, 2025 is not far off. It's just one more cycle. The next cycle is likely going to be what brings Bitcoin to everything, I would think. And we're still early enough where it's worth getting in on the ground floor. And if you're willing, if you have that investment horizon to at least another cycle, it makes a lot of sense to me, to diversify in your portfolio. Tim Cook, the head of Apple, has also said that he's been holding Ethereum and Bitcoin, and that cryptocurrency like that is a decent idea for a well-diversified portfolio. Institutional adoption is really going through the roof, and that will likely decrease volatility over time as they'll hold long term. And the energy efficiency arguments are not really the big bogeyman that people make it out to be. I think lots of that is driven by bank FUD, because they realize that they're going to be replaced. And so this is my case. This is why I think it makes sense to hold cryptocurrencies in your portfolio in the year 2021. And over time, I think the case is only going to get stronger and stronger and stronger. Sorry about the length of the video. I just thought it was, I think that was the case. I wanted to make the case a little bit more thoroughly. We'll see you in the next video.